in the case of Bitcoin, a sort of hard money store of value asset. In the case of Ethereum, Ethereum is really sort of trying to rewrite the internet, basically creating a completely new structure, a new platform on which you can really build a lot of the things that we sort of think of as the internet today. So whether it's Facebook or Google or Twitter or what have you, all these things can basically be sort of reimagined, rebuilt through Ethereum. And if you look at sort of where all the development time and energy is going, i.e. the number of developers on the different platforms, Ethereum is by far and away not just the leader in terms of development, but also the fastest growing of any platform out there. So all of that is playing a big role in terms of the supply dynamics. So Ethereum is still in the process of transitioning here from a proof of work setup, which is the same setup that Bitcoin has, to a proof of stake. So ultimately, that's going to alleviate a lot of the environmental concerns associated with Ethereum. And the other thing that'll happen is you're going to have a sort of very anti-dilutive dynamic. So with Bitcoin, you get these sort of so-called halvenings roughly every 4 years, where the reward for mining a block of Bitcoin gets cut in half. Currently, we're down to 6.25 Bitcoin per block. That's from 50. So went 50 to 25 to 12.5 to 6.25. Ethereum is going to have basically a thirdening of its reward structure. So if you go back and you look at the price action in Bitcoin, every time you've had a halvening historically, you've had a very significant, usually tenfold or more rise in the price of Bitcoin. So here you are with Ethereum having a thirdening.